webinar that is normally done by Annabelle Pacheco. I'm her substitute teacher today. I'm Bill Gross. I work with Annabelle. I'm actually one of the people who pushed her to do this because she's done so well in her multifamily business and real estate investing. And so often I'm asked about people who want to learn how to make more money and or increase their wealth and do it in multifamily real estate. And so I've done some investing with Annabelle as a partner. I've watched her on her path and want to help other people do that. And so we started this group. I thought today, just given that I'm the substitute, not the full-time person, that I would kind of review some of the fundamentals as to why we do this. So really just a quick question in the chat box. If you put in, are you an investor? Are you a real estate agent in the space? Or both? Go ahead and put in your answer there. And then we can get clear on what you are. Put down if you're an investor or a real estate agent or both in the chat box. And that way we can make sure we're appropriate. Who here is a real estate agent looking to learn how to sell these properties to other people? Gregory's an investor, or who's an investor? So I'll tell you, I'm investor. Good, William. So I'm personally both. I run my business all week long. I'm a real estate broker. I focus in probate real estate, but I don't really come across investments as a broker. I work with investors who flip the properties. That's flipping isn't really investing. Flipping is more income. So I look as an investor for multifamily, and I've had people on this show. I came as attendee a couple times that I invested with. Okay, Sean's looking to help clients and invest in the future. Great. So we're all looking to be investors. And it's really important that the only way to invest money, you can make money as an agent or make money as a wholesaler in multifamily, but the only way to invest is to have more than you need to live on and take the extra, and that's what you invest with, right? So I sell houses as a way to make income, but the excess I don't live on, that's what I invest, and that money then is to work for me as an investor. Some people do both together. They invest in properties and then they buy and sell similar properties in the same market. I don't do that. I don't buy properties in Los Angeles or California where I'm a broker. I buy in other states where I get a little better return for my money. And Terry says you're an investor in multifamily with your husband and looking to be a general partner. Wow. Okay. So I can't really teach you how to be a general partner. I've never been one. I don't have the interest in being one. I have a pretty full-time business. I'm only a limited partner. And that's my interest. I make money in my business, and I want my excess money, my savings, to grow while I'm working. So I put them to work while I work, and then if my money's working and I'm working, we both are. And at some point, my money will keep working, and I won't work anymore. I could do that today, but I would have a lower lifestyle in that I make really good money in my business. So I continue to work and add to my investment portfolio each year, both retirement money and investment money. So that's what I am. I think it's really important to be very clear. When I yesterday hosted a call with Jen and Stacy Conkey, and they help beginning investors get started. And they confirm something that I feel all the time, which is how do people go from their never investing to the first investment? No different than how you go from not owning a house to owning your first house. No different than I would imagine Terry not being a general partner to being a general partner the first time. How do you do that? It's really a transformation. You're talking about changing who you are into somebody who you want to be. Or changing who you are by accepting who you are and not the limitations you have on yourself. But I believe 90% of that transition is mindset. So I would say that you want to be around people who are mentally putting you in that space. I know Grant Cardone is somebody who both teaches me to be a better business person, and he's a real estate investor. And so I like a lot of his material because it covers both those grounds. I like Tony Robbins. I was on his UPW last week, his Unlimited Power Within, Unleash the Power Within, last week. Because mentally, it's about getting through your fears and pushing yourself forward. So today, though, I think what would help would be to review what are the reasons when people say they want to invest in real estate, what are the reasons they do that, and what are the advantages of that? So I thought what I'd do is just kind of clarify by looking at the advantages of investing in real estate. Because and this goes back to Think and Grow Rich. If you focus on your solution so much, If you focus on what you want so much, eventually you'll be it. Now, I would say when I was a teenage boy, all I thought about were teenage girls. I never became a teenage girl, just for what that's worth. Maybe I had some other time with them. But here's why. These are the 4 main reasons why people want to buy real estate. And I would say if you don't have enough now and you want more, if you have none and you want some, you have some, you want more, you have more and you want a lot, you got to focus on these advantages of it. Number 1, cash flow. It's nice when I put money into an investment, I get a quarterly check. I actually get a auto deposit into my bank account. As a businessman, I have some commissions. I have some monthly cash flow that comes in passively. As a real estate investor, I have, because I'm in limited partnerships, I get a quarterly distribution. And it shows up in my account as a deposit. I love it. I love when I get the email from Wells Fargo, where I bank, saying X amount was deposited and who it's from. I can tell my brother used to be a real estate mortgage lender in the San Gabriel Valley Inland Empire. And he retired from real estate about 10, 15 years ago. Now, he lives a little more modestly than I do. But he had bought properties and over a period of time, refinanced them into lower rates, took the cash and kept paying them off, and now has paid off properties, and he lives off the income exclusively from his rental properties. He owns actual property, actual individual single-family homes, as opposed to multifamily. The nice about multifamily is the cash flow from the beginning is a little more steady and can scale. But either way, one reason why people invest in multifamily is they want cash flow. Who here would like more cash flow? Anybody? Who here wants less cash flow? Anybody? I hope not. I think we're in the right group here. So cash flow is one of the main reasons why people get real estate is to get that monthly or quarterly cash flow. Number 2, loan pay down. When you buy a property and you finance it, most loans, you have a principal portion and an interest portion. And what happens is if your property breaks even even if it only breaks even, while it's paying off the mortgage, the loan balance is going up or down. Who knows the answer? When you pay your monthly mortgage payment, it goes down, right? And so as your monthly payment goes down, eventually it gets paid off. And that's the goal. The goal is either pay it off or earn the equity by that loan balance going down over time. But when we cash flow properties, we always look at the interest portion, very important. And we also expect we have to pay the mortgage off over time. And over time, the portion that goes to the principal goes up over time, not down. So you buy a property, you get cash flow. While you're getting cash flow, your tenants are paying down your mortgage for you, helping you build equity that way. So you build equity on the loan going down. The number 3 is you build equity on the appreciation of the price going up. So there are a lot of people who, and when you search into Google, if you go to YouTube, I just did it the other day, you search the terms real estate crash, there's like 74 million videos on that. But real estate has only gone down in value one period of time in American history since it's been tracked. Who knows when that one period of time was? Anybody? With the chat box, when's the one period of time? Was the Great Depression? Really, the statistics weren't really tracked back that far. But in my lifetime, or the last 60 years even, 63 years, the only time real estate went down was 2008 through 10. Which really, that was not just a downturn of the economy, that was a real estate bubble created by real estate products. And today, I believe when people talk about real estate, the market has cooled off from red hot to maybe just red hot or warm. But I'm not aware of, and in a normal market, out of 50 areas, 5 might be going up in value, 3 might be going down, or 10 might be going up and 5 might be going down. But on average, real estate goes up over the long run, average 2 to 3 to 4% per year. And so homes go up at 4%. You might say, well, why? That's not a very good return. But remember, you're only putting down maybe 20, 25, 30%. And so if you imagine you put down 25%, the property going up 4% per year, that's the portion you've invested plus the other 3 portions you didn't invest. Or it's the equivalent maybe of a 16% appreciation rate on your money. So appreciation drives up the value of property over time. And so you're getting cash flow. You should probably never buy property without getting some positive cash flow. And while you're getting cash flow, your tenants are paying down your mortgage, and the property is going up over the long run in value. That's number 3. Number 4 is tax benefits. I saw an interview of the original author of Rich Dad, Poor Dad, Robert Kiyosaki, one of the greatest books. If you haven't read it, you should read it. And he was interviewed by, who was it? It's a great interview. He was interviewed by, I forget, it was on YouTube. And who was it? It wasn't Joe Rogan. It was, anyhow. And when he talked about the benefits of taxes, he lit up. Because as a real estate investor, he pays no taxes. So there's 2 types of taxes benefits on real estate. One is depreciation. I made a limited partnership investment in December last year of $50,000. I got a write-off on my income last year as a result of that investment of $41,000. And in my tax case, I saved about $11,000 in taxes from that $50,000 investment, meaning right away, even if I just get my money back, I already saved $11,000. But I continue to get cash and I expect it to go up in value. But depreciation is a way to get paid when you buy property, not the land, but the improvements over time go down in value to 0. Now, a structure might be 25 years, carpet might be 5 years. But over time, you can write off your investment over time faster than the property goes down to 0. And so what happens is while you're making money in your property, you're going to get a tax benefit on the depreciation along the way. And that will most commonly offset the income you get from the property. If you get a 5 or 8% return, usually that will be covered by the depreciation for the first couple of years. Now, when you sell the property, you capture it, but then you have the other advantage of, on this chart 4B, 1031 exchange. You have the option, when you make money on investment property, to take all of that and defer the taxes into the next property, and to the next property, and to the next property. There are people who take their residence. Now, there's limits on how much you can, there's also an exemption for your residence of $250,000 per person, $500,000 per couple. There's some limitations to that. Talk to your accountant. But there are people who, when they buy a house, there are people I know who bought a house 30 years ago in Santa Monica for $30,000. Today it's worth $3 million. If they sold it, they'd owe tax on $2.7 million minus $500,000. They owe tax on $2.2 million. It's a lot of money. And so what they've done is they've converted that house into a temporary rental. And the laws are, talk to your accountant, something like if you rent it out 2 of the last 5 years and you lived in the 2.5 of the last 5 years, you can roll it over into a 1031 exchange and not pay taxes on the profit, but roll the profit, both the pre-tax and post-tax part, into the next property. And so people roll up and roll up and roll up and roll up. And then when they pass, the IRS basically takes your whole portfolio and raises it to the market price when you give it to your heirs. Now, there's limits to that at some point. I think it's 11 million and change. But if you're at that level, you're not on this call probably. You're looking for something more sophisticated. So all you need to know, let's all get to 11 million. That's my goal. Let's get there and have that problem and have to get somebody to help me with that problem. But that's the advantage of taxes. So just a quick review. Cash flow, you get money every month or every quarter. while you're getting your money, your loan balance is going down, which means your assets, your equity is increasing. Number 3, while you're getting cash flow and while your loan balance is going down, on average, over time, properties go up in value. I'm so sorry about that. I didn't put on my do not disturb. Your property is going up in value. And then number 4, there's 2 ways that when it's time to cash in your chips and Uncle Sam has his hand out, you say, well, hold on, Uncle Sam. Along the way, you get depreciation to offset some of your gains. I'm so sorry about that. I should have put in do not disturb before. You could, along the way, you get depreciation, and then it's kind of like you win the poker pot, but instead of giving Uncle Sam his portion and his Uncle Sam and his cousin Uncle Sacramento, you can take all those chips and put them in the next property. That's called 1031 exchange. And that's why most people in America who are wealthy, most of their wealth that they keep is accumulated through real estate. In my experience, the reason I got into real estate was my father was an attorney, and I took the time to meet with a number of his wealthiest clients. What they all said was, I made my income in my business, but I used the business to buy real estate. My wealth is in my accumulated real estate. So my goal today is to get you to reacquaint yourself, fall in love again with the benefit of real estate. If you haven't yet invested, fall in love with real estate. If you've invested but not as much as you should, fall in love more with real estate. And the more you evaluate how much cash flow do you want, how much increase in the equity do you want based on the loan pay down and appreciation, and how beneficial would be lowering your tax bill as well as taking all those profits and rolling them into the next property. How nice would all that be? That's the question you want to ask yourself. So those are the basic advantages and reasons why people invest in real estate of all things in the world. Okay. Questions? And I think you guys can unmute yourself if you want to. Yeah, you can. Anybody? Questions? Somebody asked my contact info, Greg. I'm glad to put that in there. But anywhere in social media, I'm Bill Gross EXP. So Bill Gross EXP or Bill at the LAProbate expert.com. Yes, William, you got a question? No?
I couldn't unmute for a while.
Oh, there you go. William Holmes in the house. What's up?
How are you doing?
Doing great, man.
Great. There have been talk for some time about eliminating the 1031 exchange. Do you think that ever will come about?
So I used to say I don't have a crystal ball. I actually have a crystal ball back there. And it doesn't tell me. I think that I would say that the momentum for raising taxes nationally is great. Maybe not as great as it was 3-6 months ago because of the economy now, but still great. I think the pressure to raise taxes in California is huge and growing. And I never really looked at it, but when I calculate what percentage of my taxes that I pay are California versus federal, it's amazing to me. I had a couple good years in a row how my California portion's grown so much faster than the California portion. My California portion has grown so much more than my national portion. So to answer your question, I assume tax rates are going to continue to go up. That's my assumption. But I don't have a crystal. I'm sorry, I have a crystal ball. It just doesn't work. What do you think? Too many politicians in real estate for that to happen. Yeah, maybe. Maybe, Terry. I know that as a realtor, we're a very active and vocal association. I don't know. In California, I would agree with you, Terry, but in California, it just seems that the march to take property from people in San Francisco, for example, now there's actually a process where if you're a landlord and you have vacant property, they're now charging you for the vacancies. So in New York, rent control is so bad that there are many owners who decide not to rent out certain floors or certain buildings because they can't cover the costs of running the building, and they can't redevelop the building because the laws are so stringent, and so they have vacant properties. San Francisco has gone a step further and said, if your property is vacant, you have to pay us $6,000 a year. And of course, once taxes start, which direction taxes go? Do they often go down, or they almost always go up? They always go up. That's my assumption. William, what's your assumption? What do you think?
Great. Taxes only goes up.
I think it's only going to go up. I agree with you. So there you go. Gregory, you got your hand up. How can I help you?
Yeah, Bill, I'm getting ready to have like a 6-figure capital gain on a real estate acquisition and sale. And I'm looking to get in like more of a passive investment in multifamily. What should I be looking for in people's portfolio? What is some hot buttons? Because I'm looking for some type of like quarterly payout.
Yeah.
What would you suggest?
Yeah, I mean, so I think that when you look at multifamily properties, that's what I invest in. I invest in out-of-state multifamily. I'm a limited partner. I'm looking for a team of people who know what they're doing, have a good track record. I want to take a little less cash flow for a great track record, a great property, and a great plan. So I go on these kind of calls regularly and look for people and spread out my investments over different. And I don't want to spend more than 50, maybe 100,000 with any one individual firm. So I invest with Cardone Capital. They have both accredited and non-accredited options. I invested with Cloud Capital LLC. They had a great deal in Texas I bought into. And I gave them 50,000 and I got tax benefit and I'm getting cash flow and it's appreciating and the loan balance is going down. So you're looking, I think, to be a limited partner. You have to figure out if you qualify as accredited or not accredited. And then I would say look for good management teams with good track records in properties and areas that you think are good. I like Florida. It makes my travel to Florida business related. I used to live there. I'd like to move back there. And I'd like to move my business there. So I'd like to invest in South Florida property in particular. That's just me.
Is there any way you can give me a list of those companies or partnerships that are open right now?
Yeah, I mean, I don't know who's available right now. I'll put in the chat box. Cardone Capital is one, and Cloud Capital LLC.com is another. I'll put in the chat box.
Okay, very good. Thank you, sir.
Are you an agent or investor?
Investor.
And where do you live?
Right now, I'm in Central Florida.
Nice.
But I'm moving back. I'm moving back to California because I'm a cancer survivor and I'm not breathing too well down there. I have COPD and throat cancer, and I need to move back to California because of the dry humidity.
Well, take a look at and reach out to Annabelle because she also has some others she's invested in and she's involved with as well. Okay.
Okay. Very good. Thank you, sir.
Thank you. And then normally on this call we bring on. Usually each week we have a different investor that presents their program. We didn't do that this week because Annabelle wasn't here. But
are you familiar with a gentleman named Paul Schoen in temporary real estate?
No, I don't think I am.
Okay, because he does some. I didn't know if you were familiar with that outfit. Okay, thank you.
And Terry put in the chat box that she we talked to you about multifamily. Put her contact info also. So thank you, Terry.
All right, thank you.
Sure. Good luck and congratulations on the cancer survival. My wife's a cancer survivor as well. Okay, so I got a question here from Sharon Marie. You want to go over the 1031 exchange. What questions do you have? What did I not cover? I didn't mean to go into detail, but what questions do you have on that?
Well, I don't know much about the 1031 exchange. So if a buyer wants to buy a multifamily and it's a 1031 exchange, is it a particular procedure they have to go by in order to do so?
Yeah, there is a particular procedure. They need to find an approved 1031 exchange service company. There's a couple different ones. If you get a transaction, I can introduce you to. And so basically, the 1031 exchanger is like a third party. So when you sell the money, when you sell the property, the money goes to this third entity called the exchange company. And then when you identify your properties, and then they take that money and put that into the next property. So the money's not really even in your hands. And there's very specific rules on identifying properties and timeframes and such. So you'll need to talk to your exchanger and get those procedures before you implement that. And so Terry says that there's multifamily syndications that will take 1031 exchange for their passive investments. There are some have a little more onerous requirements, and so I had a client doing one of those. If the syndication is borrowing money for that project, then you have to sign on and take liability. I mean, I'm not here to give anybody tax advice, but the advice that my client got, and I think is true, is if you're going to do, it's like to like, and that I don't think you can be a limited partner. I think you'd be a general partner on 1031 when you exchange it. But again, talk to your accountant or talk to Terry. Maybe she can fill you in those details. Okay. Well, more than your CPA. Your CPA will have certain limited knowledge of this, but really you need somebody who specializes. There's real estate agents, there's CPAs that specialize, or accountants that specialize in real estate. I use, but I'm drawing a blank on the company out of Pasadena. Who does my taxes? What is the name of the firm? Robert Hall and Associates, and they specialize in real estate businesses and real estate transactions. So they'd be a good one to talk to if your accountant doesn't know. Like I know my son-in-law for a while who is a CPA and did taxes, but he didn't do real estate in particular. Didn't do 1031 exchanges. They would refer that out. Okay. Any other questions before we wrap up? We're at the 30-minute mark, so always ask your CPA. It's a good advice. Okay. Well, I'm going to wrap up here. Normally, this is Annabelle Pacheco's multifamily investing out of state. This every Wednesday at 2 p.m. Pacific, 5 p.m. Eastern time. And then we live stream it sometimes or post it afterwards on Zoom or via Zoom on Facebook and YouTube. I'm the guest today, Bill Gross. I really appreciate having you guys on today, your participation. If I can help, feel free to reach out to me. My number 310. Oh, let's see. This is this thing that the government tried to eliminate exchange. No, invest in real estate. Okay, I guess so. Last comment. Okay, so anyhow, feel free to reach out to me. My number 310-210-0008.